Looking to boost your income without a hefty initial investment? With just $25 per week, you can embark on a journey towards earning over $5,000 every month. Yes, it's possible. Are you excited? Welcome to Money Ocean, your gateway to all things finance, wealth creation, and success stories. Today we dive into a practical guide on how to achieve financial success through smart investing. In this episode, we focus on a powerful strategy, making $4,000 a month in dividends with only $25 a week. Join us as we explore the steps, strategies, and insights needed to build a robust portfolio starting from small investments. Let's get started. I'll introduce you to the DRIP, Dividend Reinvestment Plan strategy, and show you how to optimize it. By the end, you'll see how a modest weekly investment can potentially grow into a portfolio worth over $500,000, generating substantial monthly dividends. So grab your $25 and let's start paving the way to financial success. Every financial endeavor benefits from a solid strategy. Our goal here is to secure a steady stream of passive income even after retirement, using only $25 per week. The DRIP strategy is our tool of choice. It works like planting a seed that grows into a sturdy tree. Instead of pocketing dividends as cash, you reinvest them to buy more shares. This creates a compounding effect where your invested capital generates increasingly higher returns over time. Speaking of compound interest, let's talk about this. Compound interest is a key driver of the DRIP strategy. By reinvesting dividends, you acquire more shares. These additional shares then produce more dividends, which you reinvest again. This cycle continues, snowballing your investment into significant growth. It's akin to a snowball rolling down the hill, gaining mass with each turn. DRIP also employs dollar cost averaging, smoothing out market fluctuations. Rather than timing the market, you consistently buy shares regardless of whether prices are high or low. This approach reduces the impact of market volatility on your portfolio's overall performance. Now let's talk about automatic and streamlined investing. Setting up a DRIP plan with your broker automates the entire process. Once established, it reinvests dividends and manages share purchases without your intervention. This automation keeps your focus on long-term goals without the hassle of manual adjustments. Are you ready to supercharge your DRIP strategy? To maximize the benefits of DRIP, consider increasing your weekly contributions. By investing $25 per week, you accelerate the rate at which you acquire shares. This faster accumulation enhances the compounding effect, potentially leading to higher returns over time. Selecting appropriate stocks is critical to the success of your DRIP strategy. Focus on four main categories: blue-chip dividend stocks, dividend aristocrats, high-yield dividend stocks, and growth-oriented dividend stocks. Let's discuss it one by one. Number 1. Blue-chip dividend stocks. These are stable, well-established companies with a history of consistent dividend payments, such as Coca-Cola and Johnson & Johnson. Number 2. Dividend aristocrats. Companies that have increased dividends for at least 25 consecutive years, like AT&T and ExxonMobil, offer stability and long-term growth potential. Number 3. High-yield dividend stocks. These stocks offer higher than average dividend yields, making them attractive for income-focused investors. Examples include Realty Income Corporation and Verizon. Number 4. Growth-oriented dividend stocks. Companies like Microsoft and Apple combine dividend payouts with strong growth prospects, offering both capital appreciation and income. Based on the outlined criteria, we have identified 5 stocks that exemplify how a modest investment of $25 per week can potentially grow into a significant portfolio over time. The Home Depot, a staple in the home improvement sector, boasts a dividend yield of 2.59%, a strong dividend growth rate of 17.91%, and notable share price appreciation at 16%. Starbucks, known for its global presence in coffee retail, provides a dividend yield of 3.01% and a robust dividend growth rate of 16.69%, coupled with steady share price appreciation of 7.89%. Abbott Laboratories, a leader in healthcare products, offers a dividend yield of 2.10%, a dividend growth rate of 11.40%, and share price appreciation of 10.31%. Next Era Energy offers a dividend yield of 2.76% with a solid dividend growth rate of 10.98%, an impressive share price appreciation at 11.98%. Additionally, the ProShares S&P 500 Dividend Aristocrats ETF provides diversification with a dividend yield of 2.04%, an impressive dividend growth rate of 20.48%, and consistent share price appreciation of 8.17%. These stocks collectively illustrate the potential for steady income and capital growth, making them compelling choices for building a resilient investment portfolio through regular contributions. Let's delve into the numbers to see the potential growth of your investment. If you consistently invest $25 weekly, amounting to $100 monthly or $1,200 annually, over a decade, this disciplined approach could see your portfolio grow significantly, with estimates suggesting it could reach approximately $27,825. Doubling that investment horizon to 20 years could potentially see your portfolio grow to around $145,500, showcasing the power of consistent contributions and dividend reinvestment. Looking even further ahead, a 30-year investment horizon has the potential to yield a substantial valuation of $823,000. This long-term strategy not only aims for capital appreciation, but also anticipates generating annual dividends of $63,900, equivalent to approximately $5,280 monthly. These projections highlight how steady investments coupled with the compounding effect of dividends can lead to substantial wealth accumulation over time, illustrating the benefits of a patient and disciplined investment approach. By consistently reinvesting dividends and adding to your investments, even a modest weekly contribution of $25 can lead to substantial wealth accumulation over time. Whether you're aiming to supplement your income or build a retirement nest egg, the DRIP strategy offers a straightforward path to achieving your financial goals. Start small, stay consistent, and watch your investment grow into a robust portfolio that supports your financial independence. Thank you for joining us on this episode of Money Ocean. We hope you found valuable insights into how you can grow your wealth through dividend investing. Don't forget to subscribe for more tips, strategies, and success stories from the world of finance. Until next time, may your investments flourish and your financial goals be within reach.